So Micron stock has been going crazy lately. They're up 202% over the last 6 months. There's actually a huge demand for AI-driven memory and surging record-breaking earnings. So they are actually doing really well on all fronts right now. Their business is in huge demand and their stock is following that. So if you're not aware of what Micron Technology does, because they're not necessarily known as one of the most mainstream stocks in the world, they produce advanced semiconductor memory and storage solutions, including DRAM, NAND, and NOR flash, essentially for AI, data centers, automotive, and mobile technologies. So another company well positioned for AI, except they focus more on storage and memory. And again, this is another example of we're trying to figure out all these different companies that are going to benefit and actually see sales and revenue from AI instead of just hypothetically make money from AI. What are the infrastructure type stocks that are going to benefit from AI, and are they actually earning revenue? Micron really fits that bill. But there's a lot to break down other than just some news and a little bit of a stock surge. Now, they are down a little bit in the past 5 days and today, but that's pretty much the whole market right now, especially with what's going on in the Middle East. So you can't really hold that against them too much. You need to obviously compare that to the S&P 500, the Dow Jones, just to see kind of what the conditions are across the board. So if you look at the S&P 500, it is down over the past week, over the past day, and not doing really much in general over the past month. Now, if we look at their earnings and their quarterly financials here, earnings, they beat on EPS by 20.71%. That's great. Revenue, they beat by 5.91%. And they've just had stellar results across the board for the past year. Quarterly financials, obviously very important. Many AI companies that are supposed to hypothetically make a lot of money off AI are either in a lot of debt or they're not seeing the returns revenue-wise that they want to see yet that actually justifies how much money they're spending. Quarterly financials, though, they are up 56.65% year over year for Micron Technology. Some more great news for them. Net income up 180%, diluted EPS up 175%, net profit margin up 79%. Now, some other things to point out before we look at some more sources here. Dividend wise, you're not going to get much of a dividend here. Don't expect that. This is really more of a growth stock. So this is something you would probably want to buy and hold long term. So just if you're looking at Micron, I would think that that's the way you would want to look at it, at least from my perspective. If you're not getting much of a dividend, you want to buy it, you want to hold it long term, you want to get some huge gains and hopefully beat the S&P 500. PE ratio 37.74, not too crazy, especially in this environment, especially among the other AI stocks out there. It's not necessarily a bargain. Most people would not want to buy something at that high of a PE ratio. If you are somebody who likes to follow value investing on Reddit or something like that, they would be like, no, it's way too high. But you have to consider the returns that you could possibly be getting when you are also considering a PE ratio. And it's only one indicator. Now, for the balance sheet, they have $85.97 billion in assets versus $27 billion in assets. I think that's a great ratio as far as the return on assets and return on capital. Very good, actually. Not just good, not just decent, very good scores on return on assets and return on capital. Normally, you want something like 5 to 8%. Another thing I like to look at, which is actually shown on Robinhood, is over the past 3 months, they have a 73% return on their stock, which is insanely high for 3 months. The alternative PE ratio that you will see when you're comparing like a forward versus trailing PE ratio, that's why Google's and Robinhood's are a little bit different. It's about a 38.1, so not a big difference. Hedge funds are selling more than they are buying over the past few quarters here. So if you're really worried about what hedge funds are doing, which a lot of them are not even beating the S&P 500 anyway, they are selling more than they are buying by a fairly significant percentage. But if you look at what Wall Street analysts are saying, 49 ratings, 88% of them are saying it's a buy, 8.2% say hold, and 4.1% say sell. And if you look at their earnings over time, they keep raising the bar, which is also a great sign. Now their PEG ratio is actually a 0, so not many conclusions can be drawn from that right now. If you look at their EV to EBITDA ratio, it's another alternative to a PE ratio, more of a raw version of that, without having to worry about anything that could artificially make the number look better, like through accounting. They have a 19.93, which doesn't seem too crazy to me. It's actually ranked better than 53.11% of 723 companies in semiconductors. I also like to figure out, well, do we have some signs of good leadership at a company? Are they positioned for the future? Do they have good numbers? Do they seem like a decent value right now? Are they getting good returns? Do we think the returns will continue? How is their revenue year over year? There's a lot of different factors. But another thing to me is none of that's going to matter if you have terrible leadership. They are actually nominated as a best place to work on Glassdoor from their own employees. They have a 3.9 out of 5-star rating, which is great. That means almost 80% of their employees recommend working here. And then 80% of their employees approve of the CEO. So they believe that the person in charge of the major decisions there is a good leader. So not only are they up 200% in the past 6 months, they're up 320% over the past year and up about 346% over the past 5 years. They've really been taking off since this AI boom, and everything seems to be coming together for Micron. This is literally one of those stocks that makes me kick myself because I just did a video on this one back in like September of last year, and it looked really good to me at that time. If I had bought around September of last year, it would have been around $150 to $160 at that time. Now it's at $397. I still think it looks like a great buy, possibly to hold long term. It seems like they are one of the companies that's already seeing the revenue coming in from their AI related products. You might be buying high if you do, and obviously this is not financial advice. Everybody's in a different situation, has different allocations. If I had it, I would definitely not sell it. I would be holding it, of course, that's just me. I think now the question is just like, how high would it have to be for you to not buy at this point? But the crazy thing is it has actually more than doubled since my last breakdown of this stock. And that's only like 6 months ago. Again, not financial advice. Please do your own research, and everybody has a different scenario, so it's hard for me to say what each individual person would do.